Do you have thoughts on Gundlach's call to short utilities and go long mortgage REITs due to overvaluation of utilities?
Yeah, I mean, now I guess Gundlach's a valuation guy. I mean, he's talking his book, obviously. A lot of respect for Gundlach. But again, we've had at important pivot points, he and I have had disagreements. In July, for example, just to name a very important pivot point, he was getting quite nervous or certainly not vocally bullish on the long bond, which meant that he was vocally not bullish on utilities when he really should have bought them when they were equally as expensive, by the way. Expensive, as he should know, doesn't matter in macro. What matters most in macro is the rate of change in growth, if you were to pick one factor. And when growth is slowing, people put premiums, super premiums I might add, on that exposure. So again, if you're trying to express that exposure in across big macro, you'd be long-term treasuries, which he of course agrees with. And you'd also, if you have to go on over to equity space, you'd say, of course it's expensive, Jeff. I mean, if you're bearish on growth, of course you would, and he too, by the way, I think that he thinks that we're going to go to some negative rates or helicopter money thing. If you really do believe that, Jeff, then bond yields are going lower. I mean, we're going to see all-time lows in the bond yield, so we're going to see an all-time high in the multiple for utilities. So again, expensive gets more expensive, and Jeff knows that.